Let's start commodities now. It started the day on a positive note, but we have seen a bit of a turnaround coming in since the LME markets, or rather the European markets, have opened. So gold prices, let's get that on your screen, and we have seen a bit of a decline coming in for that. More than 0.25% down coming in for gold, 0.5% down for silver. Same is the case with energy, really, where you have seen more than 0.25% of a cut coming in for the NYMEX and the Brent crude prices. And the LME, of course, has declined quite sharply, more than 1% of a cut coming in for copper and many of those other base metal prices. The dollar index has gained up by 0.25%, and that really seems to be turning around the mood. The Indian commodity prices have not declined so much, and that's because the rupee has depreciated. So calculation seems to be cushioning the kind of fall you could have expected coming in for the Indian commodity prices. Let's get in then. Biren Vakil, he's commodity consultant, Paradigm Commodity Advisors, and he joins us live on the show. Biren, hi. Before we talk about the commodities, what's your sense now coming in for the Indian rupee? What calculations do you have in mind, and how much of a further slide are you expecting on the currency from here?
I think rupee seems a little oversold. I think we are too much bearish on rupee. I don't see fundamentals are that bad. So I think correction on rupee counts would be probably violent as the recent decline. We may see 55.50 in coming week.
Biren, also, how would you look at the gold and silver prices now? Because we've seen very choppy moves coming on for that one. 1400 hasn't kind of held, as we have seen it trying on the higher side. How would you want to trade this space?
Basically, I'm not able to trade because HFT or algo desk, this condition is very ideal and very conducive. But for direction trader or for those traders who trade on technicals, it is very difficult to make money because of cross movement, inverse movement between rupee and bullion. And besides, randomness of government policy, especially about gold, to control gold imports, makes thing extremely unpredictable. So I think bullion should be avoided for a while.
Sure. Biren, how is the base metal sector looking to you? Because we started the day all right. The Chinese markets, of course, were shut, but LME has really turned the markets around on the lower side. How would you want to look at a copper or aluminum, lead? How would you trade those metals?
For LME, I think copper is capped between 71 to 75, and Indian copper seems to be capped in between 390 425. Range is quite big because of expanded volatility. But I think entire BRICS deleveraging here, and macro fundamental on China and Brazil seems too much bearish for me. So I'm willing to go short on any release towards 415.25, but for intraday, just for intraday, I would prefer to buy lead, especially around 119, stop loss 118, and upside objective 122.
Biren, what's your sense now coming in for the energy space? Because we started the day on positive for that one as well. The crude was trading at the 2-week highs, but just a few minutes back, or rather since the European markets have opened, we have seen a decline coming in for that. Crude prices and natural gas, how are you looking at these trade strategies?
Gas, I'm quite comfortable to trade on both sides. Swing trade I am preferring. Today my call is around buying around 218, upside objective 225, 226, and the stop loss is very narrow, 215, 216. For crude, I am bearish since last couple of weeks, but my call is not working. But still, I would take the chance to short around 5580, stop loss would be 5633, and downside objective around 5480, 5500.
Sure. Biren, that's about the non-agro commodities. How are you looking at the agri space as well, especially the edible oil space, where the weakening rupee does lead to a rise in prices, and also the good monsoons? The onset at least has been on the positive side. How are you reading these two factors when it comes to the edible oil space?
I think I would take a chance to go short in. I would go to take a chance to buy CPO around 493. If I get a dips, sharp dips around 493, my stops would be 488, and my upside objective around 497.
Biren, how would you look at the mustard prices? Because we've seen a bit of a choppiness coming in for them.
I think mustard seems to be capped between 35 and 35.50, but I prefer to go short around 35.70 with the stop loss of 36.11 and downside objective around 34.80, 35.
And also with the good onset of monsoons, at least in much of south and western part of India, how would you be looking at the prices of pulses and sugar going forward?
Sugar, I'm not sure much, but I'm a little bit bearish in chana, especially chana and mustard market looks full carry market. So ideally for hedgers, they will keep on getting rollover premium in their short side of position. So I would prefer to be a directional trader and short trader in chana and mustard both.